Hello, everybody. I hope everybody is ready. We're going to see a huge volatility in the market now. So let's see ਕੀ ਹੁੰਦਾ ਆ ਸਤਿ ਸ਼੍ਰੀ ਅਕਾਲ ਜੀ trades any USD pairs and gold. That's what we're going to target. Alright, that's what we're going to do. USD pairs and gold. Any you can pick. That depend on the interest rate decision. If they increase the interest rate, the interest rate increase खाता था we buying it, and ਜੇ interest rate नहीं ਵਧਾਇਆ ਤਾਂ be selling the US dollar. ਤੇ gold ਉਲਟਾ ਹੋਏਗਾ US dollar ਤੋਂ. We're taking direct entries, but you guys can take you can put the pending orders as well. I would put the pending order just selling the US dollar more, just to cover ki J interest rate decision, interest rate na badya. That will help us. But otherwise, other side of this J interest rate bad gaya, then we go other way manually. So I'm just setting up the screens. Signal group ji 1st of July to open hoega. So 1st of July till 7th. So every month pehla hafta I add people in. So YouTube ਵਾਲਿਓ So we got 9 minutes. 9 minutes रह गए हैं. Sorry guys. If you guys want to ask questions, maybe it's better to come live on TikTok, so I can see questions at one place. Because not every screen is on front of me, and I can't keep an eye on every screen because I need to pay attention on my screen. So basically, gold we already got a buy. ਜਿਹੜਾ ਸਵੇਰ ਦਾ signal ਆ. It depend on really. I recommend you to move it a bit further down if you guys can. So 1960 the around, and then I can open another pending trade, buy stop. So 1953 ਤੇ ਆ 1955 ਦੇ ਉੱਤੇ no 1956 ਦੇ ਉੱਤੇ ਇੱਕ buy stop ਮੈਂ ਲਾਤਾ ਆ just to see if decision comes in my place. US dollar index ਦਾ sell already ਜਿਹੜਾ ਕੱਲ ਦਾ ਲਾਇਆ ਹੋਇਆ profit ਦੇ ਵਿੱਚ ਆ. We can just literally see and US Tech 100 is in profit from since yesterday. US 500 is in profit since yesterday. So ਕੱਲ ਦਾ ਜਿਹੜਾ ਲਾਇਆ ਹੋਇਆ ਸੀ trade ਉਹ ਮੈਂ protect ਕਰ ਦਿੱਤਾ ਆ. ਜੇ ਅੱਜ trade ਉੱਪਰ ਨੂੰ ਗਿਆ ਤਾਂ we still gonna use the same yesterday's trade. US 30 ਜਿਹੜਾ ਕੱਲ ਦਾ trade ਆ loss ਦੇ ਵਿੱਚ ਚੱਲ ਰਿਹਾ ਹੁਣ. I forgot to implement the trailing stop loss, so that's my mistake. We got Euro USD. So Euro USD the buy ਲੱਗੇ ਹੋਏ ਆ. I protected both of the buys. ਪੁਰਾਣੇ trade ਜਿਹੜੇ ਆ. So I'm expecting it to go up anyway. But that all depend on ਕਿ ਕਿੱਦਾਂ ਹੁੰਦਾ ਆ. ਠੀਕ ਹੈ. So AUD USD, I'm just adding buy stops on 1 hour top of 1 hour candle. ਜਿੱਥੇ 1 hour ਦੀ ਕੈਂਡਲਾਂ ਹੁੰਦੀਆਂ start. And GBP USD same ਜਿਹੜਾ ਸਵੇਰੇ signal ਦਿੱਤਾ ਸੀ that was done. And I'm adding one more buy stop. New Zealand USD again right on the top of 1 hour candle. And so USD CAD ਜਿਹੜਾ ਕੱਲ ਦਾ ਸੈਲ ਆ ਲੱਗਾ ਹੋਇਆ ਹਲੇ ਵੀ ਪ੍ਰੋਫਿਟ 'ਚ ਆ. You guys can close it or I'm gonna use the same sell. ਤੇ that's it. USD CHF we can see ਕੀ ਹੁੰਦਾ ਆ. There is a new broker we call multi-bank broker. You can get a link from my main Telegram group. They don't charge any swap fees. And USD JPY. So USD JPY I got sell already since yesterday, so we need to see because ਜਿੱਦਾਂ ਮੈਂ ਤੁਹਾਨੂੰ ਕੱਲ ਦੱਸਿਆ ਸੀ ਕਿ ਕਿਆ ਜਿਹੜੀ ਸਪੋਰਟ ਆ ਇਹ ਨਹੀਂ ਟੁੱਟੀ. ਕੱਲ ਵੀ USD JPY ਦਾ ਸਪੋਰਟ ਨਹੀਂ ਤੋਂ ਟੁੱਟੀ and ਅੱਜ ਵੀ ਨਹੀਂ ਟੁੱਟੀ. So we just need to wait for it, and that's it. We're not going to trade much. Bitcoin I already got buy in. Ethereum I already got a buy in profit, and WTI is closed. Brent is closed as well since morning. And gas slightly in loss ਜਿਹੜਾ ਪਹਿਲਾ trade ਆ, but I got pending trade the gas around 210. So 5 more minutes. 5 more minutes ਰਹਿ ਗਏ. Let's see if I can go through questions. So it really depend on the interest rate decision ਕਿਉਂਕਿ ਹਲੇ interest rate ਜਿਹੜਾ decision ਆ ਉਹਦਾ forecast ਜ਼ਿਆਦਾਤਰ ਲੋਕੀ ਇਹ expect ਕਰ ਰਿਹਾ ਕਿ it will stay the same. So that's something very crucial to watch. USA ਦਾ ਇੰਟਰਸਟ ਰੇਟ 5.25 ਆ, forecast ਜਿਹੜਾ ਉਹ ਵੀ 5.25 ਆ. So all we need to see is, are they going to increase it or not? If they're going to increase, that will strengthen the dollar. ਜੇ ਉਹਨਾਂ ਨੇ ਨਹੀਂ increase ਕੀਤਾ, that will temporarily weaken the dollar. ਪਰ ਉਸ ਤੋਂ ਬਾਅਦ ਅੱਧੇ ਘੰਟੇ ਬਾਅਦ ਪਾਵਲ ਦੀ ਸਪੀਚ ਆ. We need to see what Powell is talking about. Maybe he can crash the market after that as well. And for USA, I got different broker. You can send me a message on my Instagram or Telegram. I can send you the link for USA broker. नहीं जी, NGAS, I use MT5 for NGAS. So that's what I use. So 3 minutes, guys. A gold buy or sell, it all depend on more probably a buy. But ਜੇ interest rate ਵੱਧ ਗਿਆ ਤਾਂ there is a possibility gold can go down. No, we don't do options in stock. We just trade straight. Hanji, multi-broker works in Canada, definitely. It's a quite easy one to work as well. Pending order, I just put it on a strength. ਡਾਲਰ ਦੀ ਵੀਕਨੈਸ ਦੇ ਉੱਤੇ ਤੇ ਗੋਲਡ ਦੀ ਸਟਰੈਂਥ ਦੇ ਉੱਤੇ ਪੈਂਡਿੰਗ ਆਰਡਰ ਲਾਏ ਆ ਬਸ, ਤੇ ਦੈਟਸ ਇਟ. ਰੈਸਟ ਵੀ ਟੇਕਸ ਡਾਇਰੈਕਟ ਐਂਟਰੀ ਜੇ ਮਾਰਕੀਟ ਦੂਸਰੇ ਪਾਸੇ ਚਲ ਗਈ. ਯੈਸ, ਆਈ ਡੂ ਟ੍ਰੇਡ ਸਟਾਕ ਟੂ, ਡੈਫੀਨਿਟਲੀ. I don't use options, so I really got no clue, to be honest. Neither I can suggest. ਮੈਨੂੰ ਹੁਣ ਪਤਾ ਨਹੀਂ ਜ਼ਿਆਦਾ options ਬਾਰੇ. If I use them, then I can suggest definitely, but I don't. Gold can go 1922, 19 early 19s, or gold can go around 2000 as well, but not today. We can see, gold is on very strong resistance. So ਜੇ ਆਪਾਂ gold ਨੂੰ zoom out ਕਰਕੇ ਦੇਖੀਏ, and then 1 hour candle is here, and then you can see gold has been consolidating on just sideways since last few weeks. So ਇਸ ਕਰਕੇ ਅੱਜ ਦਾ ਜਿਹੜਾ ਡਿਸੀਜਨ ਹੈ ਬਹੁਤ ਕ੍ਰੂਸ਼ੀਅਲ ਆ gold ਦਾ. 1 ਮਿੰਟ ਰਹਿ ਗਿਆ ਇੰਟਰਸਟ ਰੇਟ ਦਾ. Tesla, we already predicted 250 to 270. So Tesla is already middle of, we already hit the target for Tesla this week. So now I need to relook at it again. See, देखते हैं ਕੀ ਹੁੰਦਾ ਹੈ. So we got just last minute we are in now, and should be. Decision should be in a minute or so. So here we go. Oh, 525. This is a miss sign. This is a misguided sign. I don't know what's happened. Is that right? Did they decrease the interest rate or increase the interest rate or kept it there? What they done? मेरी screen ਦੇ ਉੱਤੇ 5% ਆ ਰਿਹਾ, guys. Can anybody confirm कि what's happening? Did they say 5% or did they? Oh. No, it's 5.25%. So let's see. if gold can do recovery. So you did a US dollar index that's closed the trade. So we need to wait. We will see the recovery. And just going to buy the gold. And let's see what happens. So indexes are coming down. Yep. सारे ਜਿਹੜੇ ਕੱਲ ਦੇ indexes ਸੀਗੇ trades ਬੰਦ ਹੋ ਗਏ ਆ. So it's going opposite actually. So that's a bit weird. We can take a sell. US dollar buy. We won't trade much until we see the clear picture on the market. So the sell is gone in profit. All I need is to confirm I can protect it. Yeah, it stays same. So they have updated the figures on investing.com. So what they done is, I think it was technical mistake. They shown 5% pehla, and now they shown 5.25. So they didn't change the interest rate, basically Fed. So that's as expected in the market. So let's see, coming back. Gold is coming back now. Yep. So US dollar indexes, I'm buying the indexes. I'm buying. It should do recovery. It shouldn't do selling. But recovery honi chahiye, yeah, shouldn't be. So we wait, what's happening? So we're just gonna delete the pending orders. None of the pending orders are triggered. So market is going opposite way, direction. So we got buy protected. So USD CAD in profit. USD CHF buy now. USD JPY can buy it now. Okay, so protect the gold sell trade before. Oh goodness, that was very quick. I'm just waiting for gold to drop a little bit more so I can protect the sell trade. So gold should do recovery. I can expect around 1940s, possibly. It can still go down and then show some recovery. So we just need to keep an eye on it. So got the pending order around 1938. There you go. Gold is showing some around 1940. Yeah. I left one pending on around 9040 and see. Let's see. It's a bit confusing at the moment market the way it's reacting. So I have to be very quickly active on it and act on it. So I'm just going to implement trailing stop loss on sell. just buy the entry and then see where it goes. And chase it up. US dollar index. Just protecting it. Okay, it's going other way around. Await, 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 await. So protect USD JPY. Bitcoin is on 25th, 680. Ethereum is down as well. USD Mexican fuel is dropping as well. So fuel is dropping. There will be a buy opportunity in fuel soon. Gold is really going down, so we just protect the gold sell trade and then wait for the gold recovery. It's nearly touched the 1940, but it didn't trigger my trade 1940 though. So need to keep an eye on that. So just going in a bit bigger time frame. So I can keep an eye on all the trades. It's not a good news. It's as expected. So that was expected anyway. There will be no interest rate hike. So that shows कि it's just meeting expected zone. So the gold has been in under pressure from, as you know, July. The June start hoya, gold was under pressure anyway. But I think we will see another recovery on gold here. So I'm just carry on moving the trailing stop loss and see if gold can do recovery from 1940 zone here. So I got a pending trade at 1940 pending buy, and then I'm chasing it up with the trailing stop loss from the back. And here US dollar index, I'm just chasing up the profit on that. Oh, it didn't trigger again. It touches 1940. Yeah. 1940. It's just touching the 1940 and recovering back. That's what the gold doing from there. So it's gonna close my sell. Yes, it's closed my sell in profit, but I still expect gold to go a little bit down because there's a lot of pressure for gold to go down. Yeah, US dollar index is carry on going up as well. Index is still not there. Yeah, US 30 is in loss, US 500 in loss, Euro USD in loss. GBP USD trade is closed because the pending trade didn't trigger, and AUD USD is not in loss either. Nothing triggered in New Zealand USD. USD CAD has closed the buy. So buy in USD CHF. I'm just gonna protect it. So market will do recovery. So all we need to look for is the resistance and support areas. So we place our pending trades around that areas and then wait for it to do the recovery. So USD JPY, I've just placed a trade around 140.20. And I won't touch Bitcoin and everything yet. So gold is doing recovery from 1940. So it's coming back from there. So our sale, jeda sell kita si, that goes in profit, and jede buy there is still in loss. So I'm just waiting for gold to do recovery, and then we can recover that loss as well. So gold is doing some recovery sign. Let's see in smaller time frame. Yep. It just missed the triggering that 1940. It touches line did touch this one, but uton thalle nahi gayi and it didn't trigger the trade buy trade. So I got pending buy trade pehle wala jehde khole sige, and now they're going to be in profit soon. It's all about just being patient. So we made profit with a sell, and then now we should be okay creating a profit with the buy as well. So now I'm just waiting for US dollar to do some show some weakness. So I'm not leaving any pending trades now. So I'm just closing the pending trades. I just took the direct entry. So gold is coming back, 1944.
Pulled the sector action, I went back and I looked at pauses historically. Global financial crisis, big one there. Fed was raising for a couple years. 2006, they paused into 2007 for over a year. In that time, guess what? The stock market rose, but the stock market was already in a bull market. Here, the market was in a bear market before the Fed began tightening. So that is a huge, huge difference. Most of the sectors were in the green earlier. Staples is the only, and that's a defensive sector that's in the green here, along with tech just a little bit. Energy taking it to the downside, along with healthcare. And here's a look at the NASDAQ as well. Not a lot of standouts in terms of green.
Well, I actually wanted to get you to double click on the NASDAQ a little bit here, Jared, because we have seen the fate of so many of these large cap tech stocks sort of move inversely to rates this year. That's sort of been less true recently when the AI enthusiasm is sort of taken over. But it's interesting that we don't see sort of a uniform reaction there. Microsoft, NVIDIA, Microsoft barely, but in the green. And
gold is coming back, guys. I told you guys gold is coming back.
Let's take a look at NVIDIA here. We did see
1940 was the buy zone. I missed the buy here because it didn't trigger. I think I maybe just put it too low. 1940 तो थोड़े 10 पिप ऊपर रखदा, it could have been trigger. पर I जेड़ा मेरा पहला buy खोलिया सीगा when trading result came, ਉਹ buy ਜਿਹੜੇ ਆ ਸਾਰੇ ਹੁਣ profit ਚ ਆਉਣ ਲੱਗ ਪਏ ਆ. There you go. So we're back in profit now. So we first made the money with the sell, and now we're making money with the buy.
Apple and Tesla. There's Apple sinking into the red, but not by
US
much.
dollar
And then,
index sell
where
in
did
profit
Tesla
now.
go? They're down. Tesla down about 2%. Is it going to be up
I'm
14
gonna
days in a row?
buy
Not
US
right now.
500,
Not
US
at the moment,
30
no.
already
But
in
both of those
profit.
stocks, Tesla and Apple,
Euro
coming off
USD
big
buy
buys.
in
Apple, of
profit,
course, very
GBP
recently
USD
at
buy
a
in
record
profit,
high.
AUD
Let's
USD
get back
buy
to
in
our panel
profit,
now. Jordan
and
Jackson,
New Zealand
RJ
USD
Gallo,
buy
Sarah
just
House
right on
are
a
all
line,
still
USD
with us.
CAD
So
sell
Jordan,
in
as we
profit,
see this
USD
sell-off in
CHF
stocks,
sell
and
in
we
profit,
know following these Fed decisions
USD
and during
JPY
Christmas,
sell in
we can get some
profit.
volatility.
So I'm
Is
gonna
what
just
just happened
protect the trades,
negative
just
for
put the
equities?
little entries on the.
Well, I think the market reaction is basically saying you can't keep hiking rates forever, right? Stock prices have got to,
So it will
be
show some
reflective
weakness in
of
the
the rate
dollar. So there you
environment.
go.
They're
So
going to keep
now
hiking
it's
rates, and
start
it's kind
coming
of hard
back
to
to
put a
gold. So it's
valuation
gonna
on the
show
market
some
according to
fight
the
here,
market of
buyers and
18 and a
sellers.
half times. Especially if you think the earnings outlook is maybe not as rosy as currently what analysts are currently forecasting. It's just hard to put a multiple if the Fed is going to keep going here. So I'm not surprised to see markets are selling off, not just from an equity perspective, but from a aggregate demand perspective. If the Fed keeps hiking rates, this is going to continue to weigh on the banking stresses that we're seeing across regional banks. I think some of the economic projections aren't in line with a higher Fed funds, but also higher inflation expectations. I'm not really sure what forward inflation outlook the committee members are looking at. We're anticipating a 3.5% handle on inflation by next month. Remember, in June of 2022, month-over-month energy inflation was running at 6.9%, month-over-month, 7%. The last 2 months, used vehicle prices have risen by 4.4% in the last 2 months. Those things, base effects in energy, normalization in used car prices. I've found interesting the new index that the Cleveland Fed and in joint with the BLS, the new tenant repeat rent index, which now looks to be more closely tracking what we're seeing in terms of rental inflation, suggests some pretty significant disinflation coming from owner's equivalent rent over the duration of 2023 and into 2024. So you've got all these indicators, right, that suggest that inflation is heading back down and suggesting the Fed doesn't need to do all this extra hiking. And so, something's going to break here. And so I'm a little bit more worried. And I think stocks are a little bit worried as well.
Yeah, RJ, let me get your thoughts on how we're seeing the market react here on the back of this Fed decision. I mean, how much of this move to the downside is justified given what Jordan just highlighted?
I think it's interesting. Jordan said we're going to see something break. We already sort of did see something break. SVB, Signature Bank, emergency lending facilities that were put in place to help to relieve a stressed banking system amid the greatest monetary tightening in 40 years. We've seen some things break. And I think the Fed in this message is suggesting they need more time to see the implications of those banking sector stresses. Nevertheless, they took the opportunity to signal in the dots that they'll tighten more. I would argue that the dots are sort of serving their purpose as a communications tool here. They must perceive that enough of the FOMC members must perceive that there's a risk that inflation just doesn't cool down enough, despite all the signals that Jordan mentioned, and I would echo that there are plenty of signals out there that inflation's on its way down. It's still too high relative to a 2% target, however. And I think the Fed might be trying to send us a subtle message here. They're pausing right now. They might be a skip, but they'll tell you if they had to move, they would tighten again. The dots are not promises. These can change again. But I think it fits their purpose to suggest that they have a hawkish lean so that the bond market doesn't start some huge rally and that the stock market also doesn't start some huge rally, which otherwise would occur if you said, hey, we're pausing, let's see what's next.
Yeah.
Well, and on that front as well, Sarah, the stock market rallying is also one of the things that might make the Fed more likely to continue to tighten because it's sort of one measure of financial conditions loosening instead of tightening, right?
Right. So I think what's been in some ways the big surprise here with the Fed deciding to pause, skip, whatever you want to call this meeting, is that we've seen financial conditions ease since the last meeting, and they're also down since the start of the year. And so I think in some ways this was a signal that, okay, we're not gonna come through with a surprise. We are going to assess how the data unfolds, but we're still looking for those financial conditions to tighten. And so in some ways the surprise came through that dot plot with the bigger increase in terms of that median projection for the end of this year. So signaling that it's likely that we could see even more rate hikes than what was generally expected coming into this. So perhaps just a bit of a signal that maybe not a surprise at this particular meeting in terms of the outcome, but certainly ready to tighten financial conditions should it prove warranted, which based on a variety of financial conditions indexes in recent months, it certainly seems to be.
So that's the read from the Fed, Sarah. But I'm curious how you read the most recent data that came out. To Jordan's point, there are already signs here that we are seeing things move in a disinflationary, basically cooling down in terms of where the price pressures are. I mean, do you agree with his at least thesis that the Fed is a little behind the ball on this?
So I'd agree in terms of we are seeing economic activity slow. I think the pieces are certainly in place for further and some more market disinflation here in the coming months. But I think that moving in the right direction isn't the same as assuredly being back towards where the Fed wants to be in terms of inflation. So overall, we've seen economic activity be incredibly resilient, not just through this year, but over the intermediate periods. We've actually had economic surprises over the past month or so have been by the widest margin in about a year and a half. And when you also combine it with the inflation outlook, yes, we are looking at slower price growth ahead, but core inflation is still running roughly 2 times the Fed's target. And this is a Fed that talks about they want to make sure it's on a sustainable downward path, and we just haven't seen that quite yet.
So basically,
So
what
I think
all
it's
over
interesting.
so far
We're
comes
we're
out
now
is
at,
ਕਿ
if I'm right, and we get another.
even though Fed ਵਾਲੇ ਨੇ interest rate pause ਕਰ ਦਿੱਤਾ ਹੈ, ਪਰ ਉਹਨਾਂ ਨੇ pause ਇਸ ਤਰੀਕੇ ਨਾਲ ਨਹੀਂ ਕੀਤਾ ਕਿ they said it ਕਿ we going to pause. So they only paused looking at ਕਿ inflation ਥੋੜੀ down ਆ, so let's see this week, this month, and maybe we can give it another call next month ਕਿ ਦੇਖਦੇ ਆ ਕਿ inflation ਕਿੱਦਾਂ control ਚ ਆਉਂਦੀ ਆ. So until Fed says ਕਿ yes, we going to pause it, and that is when we're going to get a really good recovery from the market. At the moment, market ਦੇ ਵਿੱਚ sell off happen ਹੋ ਰਿਹਾ ਹੈ, and sell off happen ਇਸੇ ਚੀਜ਼ ਦਾ ਹੋ ਰਿਹਾ ਕਿਉਂਕਿ Fed ਵਾਲਿਆਂ ਨੇ ਹਲੇ ਤੱਕ confirm ਨਹੀਂ ਕੀਤਾ ਕਿ are they going to follow this route or not. ਕਿਉਂਕਿ ਹਲੇ ਵੀ Fed ਦੇ ਵਿੱਚ ਜਿਹੜੀ ਪਹਿਲਾਂ ਵੀ ਅੱਜ ਦੀ ਮੀਟਿੰਗ ਤੋਂ ਪਹਿਲਾਂ ਵੀ Fed ਦੇ ਵਿੱਚ ਇਹੀ ਗੱਲ ਚੱਲਦੀ ਰਹੀ ਹੈ all the time ਕਿ are we going to pause? ਅੱਧੇ ਕੁ ਮੈਂਬਰ ਕਹਿੰਦੇ ਸੀ we going to pause the interest rate, ਅੱਧੇ ਕੁ ਮੈਂਬਰ ਕਹਿੰਦੇ ਸੀ we going to increase the interest rate still once more. So ਇਸ ਕਰਕੇ ਜਿਹੜੀ ਉਹ uncertainty ਹੈ ਨਾ, that is what creating a bit of mess in the market. So this is why market is on sell-off zone at the moment. So if we look at it, so if we look at it here, market, you can see the sell-off happening. So this is the important part. So this all sell-off just giving us just one answer. There will be recovery, definitely recovery, but this is just a temporary profit taking. Last 2-3 weeks we had a good momentum coming in, so people taking up profits and everything. So this is what just simply causing all this sell-off happen. And it's not big sell-off as well. So if you look at it, Apple 0.61% down, Microsoft 0.31% down, Tesla 2.72% down, Amazon 1.88% down, Google 1.55% down, Meta 0.92% down. So ਜਿਹੜੇ ਵੱਡੇ stock are, then they are down, but they're not that big down. Adobe 1% down, Snapchat 1.92% down. So mostly Intel is up, Nvidia is up, AVGO is up. So ਜਿਹੜਾ AI stock ਆ, ਜਿਹੜਾ semiconductor stock ਆ, that's up anyway. So we can see healthcare stock is all down as well, healthcare area. We can see domestic research is down, mixed results. Communication, telecommunication, entertainment is down. Consumer down, manufacturing down. Literally, if we look at it, the world. So this is whole China. China is green. Japan is green. India is red all. Taiwan is red. And if you look at it, United Kingdom is mostly green. Ireland is mostly green. So mostly depend करता है केड़ियां कंपनियां है ना. Canada is mostly mixed kind of thing, green and you know. Bermuda red, Cayman Islands red, Mexico green, Brazil is green. So that's the whole world. How are we performing? I don't think so. Gold export will break at this time as well, because halle bhi gold jeda it recovered back from 1940s. As I said it to you guys as well, ki 1940 is the one it will come back up. So it did came back up from 1940s. But ਹੁਣ ਕੀ ਹੁੰਦਾ market ਦੇ ਵਿੱਚ, I think this sell off pressure can cause some kind of damage to the market halle bhi. So
A downward move in inflation next month, that'll be.
And we have plenty of those in my company, so you can stay in that if you want. But I think ultimately, by extending some
So
duration,
yields are going down,
you're
so
positioning
that shows
yourself
ki
for the
gold will
next
come back
chapter
up.
of this book. The next chapter is when the economy slows due to the many headwinds that have emerged and will likely intensify. And the Fed finally says we've done enough on inflation. We are going to start to ease to try to avoid too deep of a downturn. Once that, even a sniff of that is sensed by the market, bond yields fall, you get price appreciation, and your intermediate bond portfolio will outperform your money market fund at that point in time. Calling the exact turn and cycles is very hard, but now that we are at a point where the Fed has tightened 525 basis points, where unemployment is already starting to rise, when we are well past peak inflation, I think now is the time to leg into some longer duration positions within your individual portfolio. We've done that in our portfolios. We actively manage all our bond funds, and we've extended duration to be long of our indices in order to take advantage for that development that we anticipate. That ultimately, we're going to get some price appreciation in bonds. We're getting closer to that day.
All right, we're less than 3 minutes out until the press conference, but RJ, I just want to say one thing here, which is that everybody's been talking about this recession for what seems like forever. And I know you said it's hard to time it, but like, when is it? I mean, this year, next year? Is it really coming? Is it really going to be that bad? It just seems like it just keeps getting pushed out.
It does keep getting pushed out. I would suggest the recession we're going to see is one that may actually resemble what happened back in, say, 2000, 2001. You might remember that was the dot-com bubble bursting. There were many financial market implications, negative ones, from that. And a lot of interest rate sensitive segments of the economy slowed down, but consumer spending, roughly 70% of GDP never went negative. It's quite possible we'll see that same dynamic in this coming recession. That means the recession's apt to be somewhat mild. If consumers who right now are abundantly employed, the unemployment rate is at 3.7%. That's just off the lows of the last 53 or 54 years. If it does rise up north of 4, which I think is a reasonable expectation, the Fed certainly signals that in their summary of economic projections today, it's possible that consumers will still have enough disposable income, will still have enough employment in the economy that the C in the
So we're gonna watch live Fed in a minute. The gold will come back up. That's what I'm sure. I can't see that why gold will go really down. It's 1940 around that area. I'm looking. Obviously, it has already touched and coming back, but now it has stalled around 1944 zone. So Charlie pip the difference, yeah. So 44, 47, 40, 48 to mud ke aaya. So it's just all about now just keeping an eye in the market really. Yeah, there's a selling happening, so it's creating a pressure on the market. So Powell's speech is coming live as well.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve.
So we will see now movement, guys. So be ready again. So we will see the more movement in gold now.
Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, nearly all committee participants view it as likely that some further rate increases will be appropriate this year to bring inflation down to 2% over time. And I will have more to say about monetary policy after briefly reviewing economic developments.
Yeah, so he scared the market.
The U.S. economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. In our summary of economic projections, the median projection has real GDP growth at 1.0% this year and 1.1% next year, well below the median estimate of the longer-run normal growth rate. The labor market remains very tight. Over the past 3 months, payroll job gains averaged a robust 283,000 jobs per month. The unemployment rate moved up but remained low in May at 3.7%. There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has declined, labor demand still substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises to 4.1% at the end of this year and 4.5% at the end of next year. Inflation remains well above our longer-run 2% goal. Over the 12 months ending in April, total PCE prices rose 4.4%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In May, the 12-month change in the Consumer Price Index came in at 4%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.2% this year, 2.5% next year, and 2.1% in 2025. Core PCE inflation, which excludes volatile food and energy prices, is projected to run higher than total inflation, and the median projection has been revised in the SEP up to 3.9% this year. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5 percentage points. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, especially housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions. Target range for the federal funds rate at 5 to 5.25%, and to continue the process of significantly reducing our securities holdings. As I noted earlier, nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the
All the
end of
gold
the year.
buys are in profit,
But at
guys?
this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its
protecting them.
implications for monetary policy.
We can make the most of it. So one
In
buy is
determining the
closed
extent
in
of
little
additional
profit.
policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In our SEP, participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely
We
scenario
used to do
going forward.
that as well.
If the economy
So-
evolves as projected, the median participant
We do
projects
do,
that the
we
appropriate
used
level
to
of the
set
federal
up both
funds rate
sides trades.
will be
पर फिर काफी लोग कुछ
5.6%
कंप्लेन
at
कर
the
ला
end of
पैंदे
this
कि
year,
ਜਦੋਂ ਜ਼ਿਆਦਾ volatile ਹੋ ਜਾਂਦੀ market ਭਾਜੀ ਦੋਨੇ ਪਾਸੇ
4.6% at
trigger
the
ਹੋ
end
ਗਿਆ
of
because people don't
2024,
manage to
and
handle them.
3.4% at the end of
So
2025.
the main thing is when this kind of event happens, people
For
don't
the end of
understand
this
that
year,
they
the
need to
median
only do the
projection
trades
is
they
a
can
half
handle.
percentage
That's
point
the
higher
main
than
thing,
in
the
our March
important part.
projections.
So gold
I
is
hasten
coming
to
back
add,
down
as
again,
always,
so
that these
अपने दोनों
projections
buy
are not a
close
committee
हो गए,
decision or
and then
plan.
once we go a
If
little
the
bit more
economy
down,
does not
then
evolve
we
as
see
projected,
how it
path
is
for
speech
policy will
anyway.
adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the
Protect the
longer
sell
run.
in US dollar index.
To conclude, we understand that our actions affect communities, families, and businesses across the country.
All the
Everything we do at the Fed is in service to
indexes
our
are in
public mission.
profit.
We will do everything we
USD,
can to achieve our
GBP,
maximum employment and price
back
stability
in
goals.
profit.
Thank you, and I look forward to your
GBP
questions.
USD is in profit as well. AUD USD is in
Thank you,
profit
Colby
as well.
Smith with the Financial Times. I'm curious what gives
And New
you and the
Zealand
committee
USD
the
is in
confidence
profit as
that
well.
waiting will not be counterproductive at a time when the monthly pace of core inflation is still so
And
elevated.
USD CAD came back
Interest
in
rate sensitive
profit,
sectors
so
like
we just need
housing,
to keep an eye
while
on
they
it.
felt the drag of the past Fed actions, have started to recover in some regions, and financial conditions, most recently were easing.
So, I guess I would go back to the beginning of this tightening cycle to address that. So as we started our rate hikes early last year, we said there were three issues that would need to be addressed kind of in sequence. And that of the speed of tightening, the level to which rates would need to go, and then the period of time over which we'd need to keep policy restrictive. So at the
CHF is in
outset, going
profit.
back 15 months, the key issue was how fast to
And
move
USD
rates up,
JPY
and
just
we moved very
online.
quickly by historical standards.
Gold,
Then
I'm
last
gonna buy
December,
again
after
from
4
here.
consecutive 75 basis point hikes, we moderated to a pace of a 50 basis point hike, and then this year to 3 25 basis point hikes at sequential meetings. So it seemed to us to make obvious sense to moderate our rate hikes as we got closer to our destination. So the decision to consider not hiking at every meeting and ultimately to hold rates steady at this meeting, I would just say it's a continuation of that process. The main
We
issue that we're
confirmed it.
focused on now is
Holding the
determining
interest
the
rate is
extent of additional
continuation of
policy
that
firming
process.
that may be
So
appropriate to
that can
return
bring
inflation
some
to
kind of
2% over
positivity in the
time.
market.
So the pace of the increases and the ultimate level of increases are separate variables. Given how far we have come, it may make sense for rates to move higher, but at a more moderate pace. I want to stress one more thing, and that is that the committee decision made today was only about this meeting. We didn't make any decision about going forward, including what would happen at the next meeting, including we did not
ਜਿਹੜਾ gold buy
decide or
ਕੀਤਾ
really
ਸੀ, it's in
discuss
profit,
anything
so
about
we can
going
just
to an
put
every other
quickly
meeting
trading
kind of an
stop loss
approach or really any other approach. We really were focused on
Because all
what
the
to do at this
trading is
meeting.
about protecting.
So there was no kind of initial debate about the possibility of
Close,
July,
yeah.
any sense
Close
of
the profit
the
again.
initial support at this stage for that move?
So again, we didn't make a decision about July. I mean, of course, it came up in the meeting from time to time, but really the focus was on what to do today. I would say about July, two things. One, decision hasn't been made. Two, I do expect that it will be a live meeting.
Thanks, Howard Schneider with Reuters. I was just wondering if you could help us understand the narrative here, because it feels like there's been a level shift in the dots. Stronger GDP, less of a hit to unemployment, slower progress on inflation. And I'm wondering, in this sort of, where's the disinflation coming from?
Sure.
The labor market's going to be stronger, it looks like. It's not coming from there. Demand is not coming down all that fast, according to GDP. You've doubled your estimate of GDP. So what's the narrative here? It seems like it's getting more immaculate rather than more messy.
So you're right that the data came in, I would say, consistent with, but on the high side of expectations. So, and if you go back to the former SEP, the last SEP in March, you will see that growth moved up. These are not huge moves, but growth estimates moved up a bit. Unemployment estimates moved down a bit. Inflation estimates moved up a bit. And, all three of those kind of point in the same direction, which is, that perhaps more restraint will be necessary than we had thought at the last meeting. So, although the level, frankly, is pretty, the level of 5.6 is pretty consistent if you think about it, where the federal funds rate was trading before the bank incidents of early March. So we've kind of gone back to that. So your question is, where's the disinflation going to come from? And I don't think the story has really changed. The committee has consistently said and believed that the process of getting inflation down is going to be a gradual one. It's going to take some time. And I think you go back to the three-part framework for core PCE inflation, which is, we think, as good an indicator as you can have for where inflation is going forward. You start with goods. With goods, we need to see continued healing in supply side conditions. They've definitely improved a substantial amount, but if you talk to people in business, they will say it's not back to where it was. So that's one thing, and that should enable goods prices to continue, goods inflation to continue to come down over time. In terms of housing services inflation, that's another big piece, and you are seeing there that new rents, new leases are coming in at low levels, and it's really a matter of time as that goes through the pipeline. In fact, I think any forecast that people are making right now about inflation coming down this year will contain a big dose of this year and next year will contain a good amount of disinflation from that source, and that's, again, probably going to come slower than we would
US
expect.
dollar index
That
ਆਪਣੇ
leaves
sell
the
ਜਿਹੜਾ
big
it
sector,
comes
which
back
is
in
a little more
profit.
than half.
And
pardon
ਜਿਹੜਾ
me,
sell
of
ਸਾਰਿਆਂ ਨੂੰ
the,
ਪਹਿਲਾਂ ਖੋਲਿਆ
core
ਸੀ,
PCE
that comes
inflation.
back in
That's
profit as
non-housing
well, so we
services,
just
and
protect both the
we
cells.
see only the earliest signs of disinflation there. It's a sector. It's a very broad and diverse sector. I would say in a number of the parts of that sector, the largest cost
Indexes are going
would
back
be
up.
wage costs. It's the service sector,
So
so it's
both
heavily
indexes
labor
ਜਿਹੜੇ buy
intensive.
ਕੀਤੇ ਸੀ, they both are
I
in
think many
profit.
analysts would say
I'm
that the key
protecting
to
them
getting
with a
inflation
little-
down there is to have a continuing loosening in labor
Small
market
stop loss.
conditions, which we have
That
seen.
was
We
US
have actually
500,
seen.
this is US 30, already
Go through a
protected.
number of indicators suggesting
Tech
there's been
is still
some
a little
loosening
bit
in
in
labor market
profit, so
conditions.
not
We need to
fast.
see that continue. I would almost say
Euro
that
GBP
the
is in
conditions that
profit,
we need to
Euro
see in
USD,
place
sorry.
to get inflation down are
So,
coming into place, and that would
there
be
you go. We protected that
growth
one as well.
meaningfully below trend.
GBP USD,
It would
we
be a labor
increased the
market that's
trailing stop
loosening. It
loss
would be
profit.
goods pipelines
So we put it to
getting
500
healthier
pound.
and healthier and that kind of thing. They're
AUD
the things are
USD,
in
we
place
keep
that we
it
need
right
to
in the
see,
middle somewhere.
but the process of that actually working on
$500
inflation is
AUD.
going to take some time.
And then New Zealand USD.
Nick.
You can keep it to $500 a pound as well. And CAD, USD CAD.
Nick
we
Timmer, The Wall Street
protected
Journal.
now. We
Chair
are in
Powell,
profit.
what's the value in pausing and signaling future hikes versus just hiking now? I mean, not to be
USD
flippant, but
CHF
I
is in
don't lose
profit
weight
as well.
just by buying a gym membership. I have
So
to
keep
actually go to the
protecting,
gym.
guys. That's the whole
16
point of
of your
me being
colleagues
live,
put
okay?
down a higher year-end
Keep
23
protecting your
rate
trades.
today. A majority of you think you're going to have to go up by 50 basis points this year.
So I protected
So why not
USD
just
JPY as well.
rip off the Band-Aid and raise rates today?
So first, I would say that the
Gold,
question
I'm
of
not going to touch it
speed
yet. I will touch
is a
it
separate
definitely.
question from
Before I go offline.
from that of level. Okay, so, and I think if you look at the SEP, that is our estimate, our individual, it's really accumulation of our individual estimates of how far to go. I mentioned how we got to those numbers. In terms of speed, it's what I said at the beginning, which is speed was very important last year. As we get closer and closer to the destination, and according to
It
the
all
SEP,
depends
we're
on the
not so
trade of
far away
brokerages
from the
are there,
destination in
definitely.
most people's
And how
accounting.
volatile the market is. The
It's
market has been
reasonable,
okay.
it's common sense
It's
to
not
go
that
a little
volatile
slower,
now, but it's
just as
going
it
to
was
be in a
reasonable
bit.
to go from 75 basis points to 50 to 25 at every meeting. And so the committee thought overall that it was appropriate to moderate the pace, if only slightly. And there are benefits to that. So
I
that gives
put the
us more
pending
information
trade
to
around
make decisions. We may
1942.
try to make better decisions. I think it allows the
Not
economy a
42,
little more
just
time
leave
to
it there with
adapt
1940,
as
one
we make our decisions going forward. And we'll get to see, we don't know the full extent of the consequences of the banking turmoil that we've seen. It
Oil
would be
will be
early to
soon
see
by
those,
as
but we
well,
don't know
yeah.
what the extent is. We'll have some more time to see that unfold. I mean, it's
Oil
just the
is still
idea
coming
that
down. Maybe
we're
we're
trying to get
looking
this
at this
right.
area again.
And
Put the pending
this is,
buy
if you think of the
oil.
two things
It
as
will
separate
come back
variables, then I think
up
I
because
think that
oil and
the skip,
inventories
I
ज़्यादा
should
use
call it
हुई हैं.
skip, the decision
So oil will
makes sense.
I know you said July is live with only one June employment, with only the June employment and the CPI report for
pending
June
trade oil दिलाते हैं.
due to be released before the July meeting.
gas
You get
का
the
I will see
ECI
the
after,
report
you get the
tomorrow
senior loan
morning.
officer survey after, you get some bank earnings at
Gold
the
is
end of
still
next month.
confused.
What incremental information will the committee be using to inform their judgment on whether this is in fact a skip or a longer pause?
Well, I think you're adding that to the data that we've seen since the last meeting too. Since we chose to maintain rates at this meeting, it'll really be a 3-month period of data that we can look at. And I think that's a full
Pending
quarter,
trades are
and I
buy
think
ones. Obviously,
you can
I'm
draw more
expecting
conclusions
to
from
come
that
down
than
a
you can
bit
from
now
a
and then
6-week
recovery
period.
after.
We'll look at those things. We'll also look at the evolving risk picture. We'll look at what's happening in the
So
financial
WTI
sector.
and Brent.
We'll look at all the
So
data,
gold
the
is coming
evolving
back
outlook,
up,
and we'll make a decision.
Let's see.
Gina.
So basically, what have we done today? Gold. This is the last trade left. Which one is in
Thanks for
loss?
taking
We
our
made
questions.
so
Gina
far
Smialek, New York Times.
one sell.
You obviously,
One,
in your
two,
forecast,
three.
marked
Three
up
profits in
the
buy
sort of
on
path
gold.
for growth, marked down the path for unemployment, marked up the path for inflation pretty notably. I wonder, since March,
The
what
gold
has
है
changed to
जरा
make you think that the
WTI
economy
जरा
is a
मैं
lot more
67,
resilient and
28
inflation's
पे
going to
round
be a lot
लाया
more stubborn?
and Brent का जरा
given
buy I got
that,
2 buys,
why
one
do
on
you feel confident that this is
72.88
as
and
high
one
as you're
on
going to have to revise the federal
71.86.
funds rate, or do you think it's possible we could have even a higher than 5.6% terminal by the end of this cycle?
USD JPY बंद हो
On the
गया फिर
first
दोबारा,
part,
so I'm not gonna
I
do
just
it
think we're
anything.
following the data and also
I'm
the
gonna
outlook.
delete
The
this
economy
pending
is,
sell
the
trade.
labor market, I think, has surprised many, if not all, analysts over the last couple of years with its extraordinary resilience, really. It's just remarkable, and that's really, if you think about it, that's what's driving. It's job creation, it's
USD CHF,
wages moving
we've
up,
increased the profit
it's
on
supporting
that,
spending,
stop loss.
which in turn is supporting
And
hiring, and it's
USD
really the
CAD,
engine, it seems, that is
increasing the
driving the
trailing
economy.
stop loss, making it
So
bigger.
it's really the data. In terms of,
New Zealand USD,
we
I'm
always
making
write
it
down at
bigger,
these meetings what we
so
think
we can just keep
the
increasing the profit now.
appropriate terminal rate will be at the end of this year.
And
That's how we
AUD
do it.
USD, we increase the profit
It's based
level
on
that as
our
well.
our own individual assessments of what
GBP
the most
USD, आप
likely
ਇਹਦੇ 'ਚ ਵੀ profit
path
बता
of the
देना है,
economy
so we
is.
just literally getting to
It can be,
700
it can
pounds.
actually in reality wind up being
There we
lower
go,
or higher.
700 pounds.
And there's really no way to know.
Euro
But
USD,
it is,
USD,
it's what people think as of today. And as the data
So
come
we
in,
protect
it can move
trailing
around
stop
during the
loss
intermediate
and
period.
we
It could wind up
protect
back in the
trailing
same
stop
place.
loss.
But it really will be data driven.
Both buys in
I can't tell you
GBP,
that,
GBP,
that I ever have
Euro
a lot of
USD,
confidence that we can
both
see where
buys are in
the federal
profit.
funds
So I'm
rate will
just
be
chasing one
that
from
far in
very
advance.
close, one from halfway. So USD 30 is in profit, big
Mr. Chairman,
profit.
thanks for taking my question.
Recovering
You had
halfway.
said back at the end of May
US
that you thought
500 is in
risks
big
were
profit.
getting closer
We're
to
going
being into
halfway.
balance. Is that still the case, or has your mind
Tech
changed
100 is
about the
still
balance
there,
of risks
but
out
I
there?
can just literally
And also,
protect
could you give
it,
us an idea of
no
what
profit,
would be
like
a
just literally
sufficiently
protected
restrictive
little
funds
profit.
rate? Is the
US dollar
obviously
index,
the current
both
rate,
the sell
according to the
are
committee, is
in
not
profit.
sufficiently restrictive? Is it 5.6? Is it 6? Where's sufficiently restrictive? Thank you.
And XAU USD ਜਿਹੜਾ ਆਪਾਂ ਬਾਈ ਲਾਇਆ ਸੀਗਾ ਸਾਰਿਆਂ ਨੂੰ ਪਹਿਲਾਂ ਜਦੋਂ ਮਾਰਕੀਟ ਸ਼ੁਰੂ ਹੋਈ ਸੀ that's in profit as well. So there you go guys, zero loss, 100% success rate so far
interest rates
today.
at effectively zero, now to 5%.
So gold is definitely keep this buy on, and we just chase it up from behind. So I'm expecting gold to, this is the slow area here.
Sufficiently restrictive
So
rate.
1950s,
And I
55s,
think that means,
that
almost by
zone here.
definition, that the risks
If you look gold from
of
far,
sort of overdoing it and
this is what I'm
underdoing
expecting
it
gold to touch
are getting
around this
closer
area,
to being in balance.
1957.
I still think,
Is
and
area.
my
So
colleagues
we can
agree
leave
that,
like one
that the
pending.
risks to inflation are to the upside still. So we
Sell
don't
limit
think
around
we're
this
there
area as
with
well.
inflation yet, because we're just looking at the data. And if you look at the
But
full
overall
range
market
of
will
inflation
be
data,
positive back.
particularly the core
Definitely,
data,
it's not going to
you just aren't
stay
seeing a lot
forever
of
like
progress
this.
over the last year. Headline, of course, inflation has come down materially, but as you know, we look at core as a better indicator of where inflation overall is going. Sufficiently, so I think, what we'd like to see is credible evidence that inflation is topping out and then beginning to come down. That's what we want to see. Of course, that's what we want to see. And
I'm keeping gold buy limit
I think
1941. I changed it from
it's
1940
also,
to
we understand that
41
there are
because we
lags,
just missed
but
that buy
remember that
limit.
it's more than a year
So
since
we can put it
financial
back
conditions
into
began tightening.
1940,
I think
50
I think the
around.
reason we're comfortable pausing is that we are
I'm gonna
still
keep that buy
much of the
limit on.
tightening took place over last summer and later into the year, and I
That's
think
really.
it's
So
reasonable
far,
to
we
think
got
that some
all
of
the
that may
trades are
come into
protected
effect.
now.
So
So
we're,
US
I
dollar
think
index
stretching out
sell is in profit.
into a more moderate pace is appropriate to allow
Nasdaq
you to
100
make
in
that judgment of
profit. US
sufficiency.
500 is in profit.
More
US
with more
30 is
data
in
over
profit.
time.
Euro USD is in profit. GBP USD is in profit, still running. AUD
Hi, Chair
USD
Powell.
is in
Rachel Siegel
profit,
from
so
the
we can
Washington Post. Thanks for taking
close
our
the
questions.
profits very near
I wanted
now.
to ask
Jab this is
further
profit
on
lane hai,
the
you
lag
guys can
effects.
close it and
When you're
that's it. Just
considering
go
when
to
you
sleep.
would hike again
So I'm just
throughout the course
increasing
of
the
the
profit
year,
in
are
New
there
Zealand
things that you would
USD.
expect to kick in
USD
as these
CAD
lag
profit
effects come into effect that would inform
it
your
hasn't hit
decisions?
the
Have you
stop
learned
loss, so
things
we're
over the
keeping the
past year
stop
that
loss
give you
there.
some sense of
USD CHF
timeline for
still
when to expect those
in
lags to come
profit,
into
so
effect?
we're keeping it there.
So
थोड़ा बता देना
it's
है
a
ताकि
challenging
थोड़ी रिकवरी हो रही है
thing in
and we
economics.
don't
It's
want to
sort of
take big
standard
risks. So
thinking
USD
that
JPY
monetary
got
policy
a
affects
sell limit
economic
around
activity with long and
140
variable lags. Of
140
course, these days, financial
15
conditions
round.
begin to tighten
They,
well
I
in
think I
advance of
can
actual
leave
rate
one
hikes.
buy
So if you
order
look back
around this
when we were
zone.
lifting off, we started talking about lifting off. By
Because
the
now
time
I'm
we
not
had
taking
lifted
any
off, the
new
2-year,
trades.
which is a pretty
So I can
good
leave this
estimate of where policy is
139,
going, had gone
14
from
maybe.
20 basis points to 200 basis points. So in that sense, tightening happens much sooner than it used to in a world where news was in newspapers and
leave
not
this here.
not on the wire.
I think that's it
So
really.
that's different, but it's still the case that what you see is
So gold is
interest-sensitive
still
spending is
buyer.
affected
I'm
very,
just
very
gonna
quickly. So
protect it.
housing and durable goods and things like that. But broader demand and spending and asset values and things like that, they just take longer, and you can pretty
ये
much
बंद हो
find
गया
research
I'm
to
not caring
support
about gold
whatever
anymore. So
answer
as
you would
long as
like
we
on
made
that.
the
So
profits,
there's not
and
any
that's more
certainty or
important part.
agreement in the profession on how long it takes. So, then that makes it challenging, of course. So we're looking at the calendar, we're looking at what's happening in the economy, we're having to
I don't
make
know
these
what's happening
judgments.
with this guy.
Again, it's one of the main reasons why it makes sense to go at a slightly more moderate pace now as we seek that ultimate.
Yeah, I'm just
I can't
trying
point
to
to
fix it. I don't know what's
ultimate
wrong with it.
endpoint. I can't point to a specific data point. I think we'll see it when we see inflation, really, really flattening out reliably and then starting to soften. I think we'll know that it's working.
That's it. So
And
all the
ideally,
golds
by-
are
by-
closed
by
now.
taking a little
कोई
more
trade
time,
नहीं
we
मेरा
won't
open
go
हैगा.
well past the
I
level
don't
where
know,
we need to
something
go.
wrong with the Instagram guys.
I was curious if you could give us an
Sorry about
update on what you're seeing on credit tightening since the bank incidents for March and how you're teasing that out apart from these lag effects.
So it's too early still to try to assess the full extent of what that might mean.
So gold के सारे trade
that's
बंद हो
something
गए
we're
हैं.
going to
US
be
dollar
watching,
index,
of
I'm going
course,
to tightening
and,
up.
if we were to see
the US dollar
what
index.
we would view as significant tightening beyond what would normally be expected, because
So
of
US
this
500, I'm
channel,
gonna increase
then,
the
you know, we would
profit a little
factor that
bit.
into account in making rate decisions.
US 30,
So
I'm gonna
that's,
increase the profit a little bit.
That's how we think about it.
Euro USD, I'm gonna increase the profit a
Thanks.
little bit.
Chris Rugaber at Associated Press. You mentioned that many of the trends are in place that you want to see. Core services ex housing has come in pretty low in the past
GBP
couple of months.
USD, I'm gonna increase
And
the
as you noted, a significant
profit.
portion of core inflation is now housing
AGD
prices.
USD, I'm
and then
just
we've had some
tightening up
quirks
all the
in used car
trialing stop
prices.
loss
So
guys, so
given that these trends
maximum
are in
profit
place,
buy
I guess I'm sort of asking the flip
That's it,
side
and
of
then
Nick's
we're
question.
done for today.
Why
So
signal additional rate
USD
hikes?
CAD,
Aren't
I'm
things headed in
tightening
the
that
direction
one
you
up as
need?
well
Why not
here.
simply give it even more
USD
time?
CHF,
Or
I'm tightening that up as
it's
well.
surprising to see so much hawkishness in the
And
dots,
USD
given what we're
JPY,
seeing
I'm not
recently.
taking any
Yeah,
trade. I
so,
got
you
two
know,
penny
we've,
trade buy and
remember,
sell.
we've,
And that's
we're
it really.
2.5 years into this, or two
So
and a quarter years
everything
into this.
100% profit
and
so far.
Forecasters, including Fed forecasters, have consistently thought that inflation was about to turn down, and traditionally, not typically
ठीक है guys,
forecasted
so
that
I'm
it
gonna
would,
go offline
and
now.
been wrong.
Powell is still
So I
ponking.
think if you
And
look
one
at
is stop
at
ponking,
core
we will
PCE
see a little bit of
inflation
movement in the
overall,
market after
look at
that.
it over the last 6 months, you're just
And
not seeing a lot
shouldn't
of
be a big
progress. It's
effect
running,
now.
and it's
I
running
think
at a
we got
level,
everything protected
over
for all the profits.
4.5%, far
So जब
above
बंद भी हो गए, don't be
our
greedy,
target,
just go
and
to
not
sleep,
really,
go to
you
your
know, moving
work,
down. We want to see it moving down
जाके गोलगप्पे खा
decisively.
के आओ,
That's all.
लस्सी पी के आओ,
We're, of course, we're going to get inflation down
enjoy
to
your
2%
life,
over time.
and
We don't want
that's
to
it
do, we
really.
want to do
Make
that
the
with the
money.
minimum damage we can to the
Pura
economy, of
paikana.
course. But we have to get inflation
Yeah,
down to
tomorrow
2%,
again
and we
we will
and
be
we
live.
just don't see
So
that
I
yet.
haven't.
So
I will look at the calendar and
hence you see
update you
today's
guys in a
policy
group.
decision, both to
Telegram
write
group,
down
and,
further rate hikes
we will
by the
cover
end of this
something
year,
tomorrow
but
as
also
well.
to
Don't
take
worry, guys.
to moderate
I use
somewhat
MT5.
the pace with which we're moving.
Quick follow-up. I mean, the last press conference, you mentioned you didn't see wages driving inflation, and, there was some research from the San Francisco Fed suggesting wages aren't necessarily a key driver, but you've talked about the labor market today and the need for softening. Can you
I
give
will
us a
update
little
in the
more
group, guys,
specifically of
what
how
time
you
I'm
see
coming live
the tight
tomorrow.
labor market driving inflation at this
I will
point?
update it,
Thank you.
definitely.
Right. So I'm not going to comment on any particular paper, but I would say that I think
AUD
the overall
New Zealand,
picture is that at the beginning,
I can't see
in
obviously at the
early
moment,
2021,
it's up to
inflation
you
was really
really. It's
coming
your
from
call.
very
I
strong
know only if I
demand
leave,
for
if it doesn't
largely for
stop,
goods.
trigger the
People
stop
were
loss,
still at
I
home.
don't touch it.
They
If
had
it trigger the
money in
stop
the
loss,
bank,
then it's
and they
fine.
wanted to spend. They
Otherwise, I'll
spent
wait
a
for the
lot
TP
on
or
goods, and of
protect
course,
it
at
on
the
the
same
back.
time, and because of that high demand, to some extent, supply chains got all snarled up. So prices went way up, inflation went way
Okay,
up.
guys, so
But
I'm
that was
gonna
the,
get some
the
of my
origin.
food
It
ready and
wasn't
stuff.
really particularly about
And
the labor
thank you
market or
for
wages.
sticking
But
around.
as you move through 21 into 22 and now in 23, I think many analysts believe that it will be important, an important part of getting inflation down, especially in the non-housing services sector, to getting wage inflation back to a level that is sustainable, that is consistent with 2% inflation. We actually have seen wages broadly move down, but just at a quite gradual pace. So, and that's a little bit of the finding of the Bernanke paper
Good night, guys.
with Blanchard
Good night.
of a few weeks ago, which is very consistent
Have a
with
lovely
what I would think.
Let's go to Michael McKee.
Michael McKee from Bloomberg Radio and Television. You said in the past that you don't like to surprise markets. It's kind of been the Fed's view. Markets should have an idea of what you're going to do before you go in. You also said a number of times that it would take a while to bring inflation down. You reiterated that again today, and that we would get to a point where inflation could be sticky. So I'm wondering, as we go into the next meetings, how Wall Street or others should look at your reaction function. What will you be reacting to, time or data? In other words, if nothing
It's on
much
YouTube, guys,
changes,
listening
if we're
to
looking
news.
at the same
It's
sort
on
of labor
YouTube,
market, the
Fed's
same
channel.
sort of inflation levels in July or in September or November, will you move because you've said you feel you need to? Is it time that's going to require additional movement, or would it be a reversal in inflation?
So I don't want to deal with hypotheticals about different ways data might move out. So we of course we don't go out of our way to surprise markets or the public. At the same time, our main focus has to be on getting the policy right, and that's what we're doing here, and that's what we'll do for the upcoming meetings. I will say the July meeting will be live, and we'll just have to see. I think you'll see the data, you'll hear Fed people talking about it, and markets will have to make a judgment.
Well, do you think inflation is likely to continue coming down based on the lags and based on your threat of additional movement? Or are we going to be in a period where we're not going to know what's happening?
You know, I think if you look at, if you just look at, I'll just point you to the forecast. So inflation is running, core PCE inflation is running at about 4.5%, a little higher than 4.5%, and the median FOMC participant thinks it'll go down to 3.9 on a 12-month basis. This is by the end of this year. So that's expecting pretty substantial progress. That's a pretty significant decline for half a year. So that's the forecast. You know, we do try to be transparent in our reaction function. We're committed to getting inflation down, and that's the number one thing. So that's how I think about it.
Let's go to Victoria.
Victoria Guido with Politico. Could you talk about the balance sheet and how you're thinking about it? What are you looking for to judge whether we're approaching reserve scarcity, and is Treasury issuance going to affect that? Also, are you considering lowering the RRP rate in order to take some pressure off banks?
So let me say, first of all, on the Treasury part of it, if I can talk about that, and then go back to the balance sheet. So on that, of course, we've been very focused on that for a couple of months, as everyone has. Treasury has laid out its borrowing plans publicly. I think I saw the Secretary's comments yesterday to the effect that Treasury has consulted widely with market participants about how to avoid market disruption, and that they're going to watch carefully for that. So that's from the Treasury, which actually sets the borrowings. At the Fed, we'll be monitoring market conditions carefully as the Treasury refills the TGA. The adjustment process is very likely to involve both a reduction in the RRP facility and also in reserves. It's really hard to say at the beginning of this which will be greater. We are starting at a very high level of reserves and still elevated RRP to take up, for that matter. So we don't think reserves are likely to become scarce in the near term or even over the course of the year. So that's the Treasury part of the answer. We will, of course, continue to monitor conditions in money markets, and we're prepared to make adjustments to make sure that monetary policy transmission works. Was there another part of your question?
Yeah. What are you considering lowering the RRP rate to help take some pressure off banks?
So we have a number of, I would say, the RRP doesn't look like it's pulling money out of the banking system. It's actually been shrinking here lately. So I don't think that's not something we've thought about a lot over time. It doesn't really look like that's something that we would do. I think it's a tool that we have. If we want to use it, we can. There are other tools we can use to address money market issues, but I wouldn't say that that's something that's likely that we would do in the near term.